You know, the world of finance isn't as complicated as you've been made to believe. Following these 5 ETF rules made it possible for me to build a real estate portfolio worth over $1.5 million in just under 2 years. And sis, I'm going to tell you exactly how. You just gotta do it scared. I've learned 5 investing rules, some the really hard and painful way. Let my mistakes be your lessons that if you learn these 5 investing rules, your investments will multiply for you quickly. Now, I say quickly because you've never experienced the power of compound interest, and reinvesting it, you'll be blown away at how quickly your money grows. 1, keep it stupid simple. Keep it simple. You have to understand that every type of investment is risky. Here's something that you might not like to hear, but you should only invest money that you're actually willing to lose. Now, let's say if the market crashes, you were investing in the market and it went down. You actually haven't lost any money until you actually sell it, you transact it. That's when either a loss or a gain happens. So I like to think of it like a balloon. Think of a balloon that you put air in it, right? You can blow it up, and you can think of that as your portfolio in the market growing. Or you can take air out of it and it'll shrink. So this will represent the market not doing so well and your portfolio losing value, but you still have not lost the balloon. So when the market gets better and it goes back up, guess what? Your balloon blows back up. But if you were to pop it, think of that as your transaction. You sold off your shares or whatever you were holding in your portfolio. That transaction will determine whether you've gained or you've lost. Now, you stack the odds in your favor by spreading out your investments wisely and taking calculated risks. Let's keep it simple. How do you do that? I'm 10 toes down, okay? That if you're investing in the market, especially if you're new, ETFs are the best way to build your wealth through investing. And you don't actually need a whole lot of ETFs. Honestly, anywhere from 1 to 3, maybe even 5 ETFs, good ones that have history, that the cost to actually get them and keep them are low. You have that in your portfolio, it'll grow your wealth tremendously over time. Now let your interest compound and invest consistently. You'll see the power of compound interest. I promise you, in a couple of years, you'll look at your portfolio and you'd be like, whoa, this happened to me. So I am literally telling you how powerfully you can grow your portfolio in quite just a few years, a short amount of time. Yes, keep it stupid simple. I learned the hard way to not invest in something I don't understand because I lost money. My second one is don't pay anyone to invest for you. You don't need to pay somebody to invest for you. The money that you would use to pay somebody to invest for you, that's your money that could be working for you and not paying any unnecessary fees. To me, you're losing out on potential returns. The fundamentals of building wealth are not that complicated. With investing in the market, just find low-cost ETFs. And yes, I have made videos. I have done the research for you. I'll put it at the end for you, so please stay tuned. ETFs have what we call expense ratios. Think of it like an annual fee that you buy into the ETF. And every regular person I know pays this expense ratio. And some ETFs have an expense ratio as low as 0.03%. Now, keep in mind, if you go and hire somebody to do something that you could have just spent a couple research hours and got it started yourself, they have to charge you the expense ratio, right? That you would be paying if you had bought it yourself. And then on top of that, they have to charge you their fee. So this will impact the total amount of returns that you actually get at the end of the year. Investing in ETFs is something that you can simply do by yourself. But that's why you've got me, because I'm here to show you, and you can do more due diligence and figure it out. But you can do it yourself. We're here to empower you so you can take action on building that foundational wealth, baby. Okay? Let me tell you how powerful it is when you apply the core principles of money. The money that I grew in my ETF portfolio helped me build my real estate portfolio today. But that's not even the crazy part. The income and appreciation from the properties are further growing my ETF portfolio.
You get it? If you don't get it, forget about it.
If you're not in this game, honey, you are playing the wrong game. You have to get on it. So when you respect the core principles of money and invest wisely, your money begins to snowball. And that's how you build wealth over time. 3, you cannot be emotional with the stock market. Don't try to outsmart the market, okay? If somebody comes and says they can get you high returns with practically no risk, you know what's happening here? They are defying one of the core principles of money. So you already know they're gonna squander your money. You're gonna lose your money.
Some of them are criminals. It can take your money eventually.
Really?
Yeah, for vanishing.
There are principles of money that you have to follow in order for your wealth to grow. Run away, far away from them. Because if you came across an investment that you were hoping to make really high returns on, it just goes hand in hand. That means there's a high risk in this opportunity or investment that you're getting yourself into. You can't cheat the core principles of money. You will always end up paying. Oh man, I'm doing little smirks in here because I have had to learn the hard way, okay? I remember when I first started and I hop on the internet and I hear someone talking about some exciting thing and they're going to the moon or they're going to the stars or they're doing whatever in all these little chat rooms back in the day, like... But yeah, it was not wise. Not knowing, all I had to do was learn the basics and fundamentals of investing with ETFs. Now, eventually I figured it out and I still was able to benefit from it. This is why it's never too late. And you don't need to know everything either, just get started. Even if it's just one ETF that you find from your research, start investing in that. Over time, you'll get the hang of it. You'll understand what ETFs are all about and you will start building a portfolio that way. It's better to find one ETF that you can grow slowly but methodically over time than to hop on like any trend. Today is crypto this, today is that, today is Ethereum, whatever. Yes, you shouldn't sit on the sidelines, but you should be wise in where you choose to put the money that you've worked so hard to get in order to see it grow. And number 4 is not for somebody that's trying to make $1 million tomorrow, okay? Number 4 is not for somebody who's trying to make some quick online money tomorrow, because real wealth is built over time. It takes time and patience. So what should you do? Focus on the long game. With ETFs, you're not really picking it because of maybe like the dividends that's going to give you. Now, there are ETFs that give dividends, but especially if you don't have huge amounts of money invested in there, the dividends shouldn't be your focus. Rather, it's about finding out the performance of this ETF from its inception. How has it done? Especially when this ETF is with a reputable firm like your Vanguards, your Fidelities. I mean, there's a whole bunch of them. So to check how an ETF has been doing since its inception, you can easily check this on Google. Just type in that ETF symbol and you'll be able to see from beginning when the ETF was created up until today, how has it done in comparison to the market. So what you're looking for is how has this ETF performed over its inception. Focus on the overall return over time. The only way you're going to win is to allow time to do its thing. Don't try to time the market. I'm telling you, you can't be emotional with the market. Your greatest asset with investing in the market is actually time. That's what you have on your side. Time. And remember, we don't plant seeds over here and just eat our seedlings, right? We need to see them grow. And this is what I love about the stock market and what it teaches us about life. You can't play completely safe in life, sis, just like in the stock market. Stocks actually become safer over the long periods of time because think about it, depending on the season, this is what you're constantly experiencing. But when you look at it over the period of time, it tends to balance out. If you like, just Google the S&P 500. Yep, go right into Google and type S&P 500. It'll pull up and then go back, let's say 2008. And after the economic crash happened, look at how it trends. Eventually it's going to trend upwards. Now, if you zoom in, you're going to get dips, you're going to get highs, you're going to get your lows, but over time it's going to trend and grow upwards. This is the benefit that you have when I talk about putting your money to work for you over time with investing in the market. Now, I compared it to not playing it safe in life because if you just held onto your cash in a regular savings account, I mean, we're in a time where all prices are going up. Everywhere we turn, the prices have doubled in just a few years. So that means the value of your cash that you're holding on, it's actually losing value. So you have to start finding ways to have your money start working for you to beat inflation, because the value of your money will go down, and we don't want that because the cost of goods and items keep going up. What am I saying? Leverage time to build your wealth. Number 5, manage your finances. Take the bull's horn on your finances, sis. Don't just go jumping on everything that you hear. Your investment strategy should be unique to you. This is why it's so important to learn the fundamentals of investing. Create a stupid, simple plan and stick to it over time. Investing well is simple. It's not easy, because you got to build up consistency, but it is simple. And you can't replace investing in the stock market with bad financial decisions. So if you've got those department store credit cards that are literally crazy high interest rates, you're not even going to get that interest rate in return if you invested in the market. So focus on bringing down that personal debt, those credit cards. And oh, by the way, if you're trying to bring down your debt and you've got some in collections and stuff like that, Call folks and negotiate, okay? You owe about 10 grand. Maybe you've got like 2-3 grand. Call, negotiate, get things on paper, and get that debt off your credit. Bring it down so you can start building foundational wealth. It's not challenging. It's been made to feel like it's gate kept, like only certain people can invest and build wealth, but it is simple. You get the fundamentals down, invest in a few ETFs, and just focus on building your career and consistently putting money in there, reinvesting your returns. Allow for time to do its thing for you. Honey, you're going to turn back in a few years. Baby, you're going to be like, who is this money for? Like rich, okay? And building wealth actually has very little to do with the type of job that you have. I started investing when I had that $12 an hour job because I believe for more and I believe for better. And that's what I hope to ignite in you for you to see in your life. I'd love to know where you are on your investment journey. Let me know in the comments. Have you seen the video that I made for you in starting to invest in ETFs? I'll put it right here. Check it out. And remember, around here, we do it scared.
You don't know what is going on. We are making money, you are sleeping. You don't know what is going on, eh?